All right, guys, about that time of day again here, folks. Back to the action here tonight. It's Monday evening after all. It's September the 14th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow. That's Tuesday's trading session, and boy, oh boy, do I have a great video in store for you guys here tonight. The charts are already on the background, as you can see. Got the oil, got the E-minis, and we got some gold. Boy, that yellow metal is setting up for some great setups here for tomorrow. Got a bunch of great opportunities we're tracking for tomorrow, Tuesday's trading session. Before we jump in and get our hands dirty on these charts tonight, though, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. That way you don't miss all the good stuff we publish every evening on this newsletter. And don't forget, if you have any questions about anything we talk about tonight, drop those questions for me in the comment section below. And as always, if you're like me and you rely on this newsletter to get your mind right and those charts right for tomorrow, if you love the video as much as I enjoy making it, how about a thumbs up for me here tonight on the newsletter video? So guys, thanks so much for tuning in. Make sure you subscribe, drop those questions in the comment section below, and thumbs up for me tonight if you guys enjoy the content on this newsletter. But enough of the introduction. Time is ticking. Let's get this nightly newsletter going by checking the calendar for tomorrow, courtesy of Econo Day. Tomorrow, of course, is Tuesday. What's happening tomorrow on the calendar? We'll check the calendar here real quickly, and we'll break open some charts here and get our hands dirty on those here. Now, real quick here, looking at the big picture here for this week, right? Big picture this week. The kind of the big picture going on this week is we got Quad Witching on Friday. Now, if you're brand new to this stuff, Quadruple Witching. The reason why we call it Quadruple Witching is because all four asset classes expire on Friday. Now, if you're not an options trader, right, this may be a bit foreign to you, but there's a self-fulfilling prophecy that goes on the third week of March, the third week of June, the third week of September, and the third week of December, right? Third week of every 3 months. That's 03, 06, 09, and 12, right? It's basically the third week of every 3 months, right? Every 3 months, the end of the quarter, right? So third week of March, third week of June, third week of September, which of course is this week, and of course the third week of December. Now, knowing that this is the third week of September, we have all four different asset classes expiring. And I'm not going to go into too much detail on this, but what you need to be aware of is that as we get later on this week, we're going to start to see a lot of what I call little grenades that kind of hit the markets. Because what's going to happen is options traders, big trading firms, as they prepare for options expiration, and again, not just your normal OPEX, right? Remember, the third week of every month is the regular OPEX, right? The third week of every 3 months is the Quadruple Witching, right? It's just kind of a kicked up version of OPEX. But the bottom line is there are going to be a lot of big trading firms, a lot of big lot traders who, because their options are all expiring on Friday, they're going to be using the futures markets to place their hedges. So what you want to be aware of is, as options traders, and really it's mostly the big trading firms, they're going to start using these markets, the gold, the E-minis, the oil. We're going to start using these markets as hedging tools like they always do, but it's going to start to really come into play here this week, right? Wednesday, Thursday, and Friday. So I always tell my clients on Quad Witching Week, what you want to really remember is that Wednesday, Thursday, and Friday is really where things start to really kick into gear. And I always tell my clients what you should expect to see later on this week is these unexpected, again, I call them like volatility and volume grenades, right? They kind of show up out of nowhere and they blow they'll kind of blow the chart up a little bit here, right here and there. So expect impulsive, unexpected volume, and the whole kind of key word, right, is just kind of impulsive and unexpected price action is we're going to start to feel here Wednesday through Friday, right? So Wednesday, Thursday, and of course options expire at the end of the day on Friday. So that's kind of the big picture right now. All four asset classes expiring on Friday. What that matters to us as futures futures traders is, of course, we know these futures markets, our favorites, of course, we'll cover tonight, will start to be, again, they're going to be a little bit inconsistent, right? Wednesday, Thursday, and Friday. Now, obviously, right, tomorrow is a Tuesday, so we're not going to worry too much about quad witching, but just be aware of that as we go into the rest of the week. Wednesday, Thursday, Friday, we're going to see kind of those impulsive, kind of unexpected moves. They almost feel like they come out of nowhere, and that's because you've got big lot traders using the futures markets like the E-minis, like the gold, like the crude oil, right, like the dollar, right, to hedge themselves against their outstanding portfolios. So knowing that, right, as we go into the rest of the week here, what else do we have going on right now? Well, we also know, of course, we got the E-mini rollover, right? So rollover was completed on the E-mini S&P. So we're now on the 1220 contract, right, on the E-minis. We also have rollover on oil, which might be tomorrow. It might be the following day. Right now, crude oil is on our radar for rollover as well. Speaking of rollover here this week, we also have, speaking of crude oil this week, we also have a hurricane coming down in the Gulf of Mexico right now. Now, we saw a hurricane a few weeks ago, but it didn't really impact these markets very much. So we do have a tropical storm that today was announced as a hurricane. It's supposed to be making landfall and creating some pretty nasty storm surges by the end of tonight into tomorrow. So that is definitely a big kind of known unknown this week for oil. Again, last time, right, we had a hurricane a few weeks ago, and it didn't really do anything to the price of oil because there's just so much inventory of oil out there. So that's something I'm watching here this week. We also have some central banks, right? It seems like every central bank this week is going to be announcing, right, including ours here in the U.S. We got the FOMC announcement on Wednesday. Thursday, you're going to have the Bank of England, the Bank of Japan. So Wednesday and Thursday are going to be all about central banks this week. And what does that mean for us? Well, if you're a gold trader, you've got to be paying attention to those FOMC announcements and, of course, central banks. So gold, right? Definitely be careful on gold Wednesday and Thursday because of central banks. But at the same time, though, right, Friday being quad witching. So really, I'll tell you, tomorrow might be one of the last kind of open sessions for the gold futures for the rest of the week here. Not to say that we can't trade gold Wednesday, Thursday, and Friday, but, again, with the FOMC announcement on Wednesday and with the Bank of Japan, the Bank of England, right, on Thursday, and then quad witching on Friday, it might be a bit of a tiptoe, around these news events for all the gold traders out there. So that's kind of the big picture we're seeing right now. Again, quad witching week, right? Quad witching week. Wednesday, Thursday, Friday, we should start seeing those little unexpected grenades, right, hitting the markets as traders begin to hedge. Rollover, again, right? Rollover. We're done with rollover on the E-minis. Keep your eyes on rollover for crude oil to the 1120 contract, either tomorrow or the following day. The hurricane, right? Will that hurricane, how much will it affect oil? It might not have an impact at all. It might really get this oil market ripping. That is something we're watching. And again, central banks. That's gold, right? Central banks on Wednesday, Thursday morning, right? So again, if you're a gold trader, careful on Wednesdays, and not every Wednesday, but this Wednesday and this Thursday because of those central bank announcements. Now, that covers the big picture of what's going on this week. Now let's dig into tomorrow's right schedule here, because you can see tomorrow's the beginning of the FOMC meeting. That won't have much of an impact for us tomorrow. We'll wait until we hear the announcement on Wednesday afternoon. But the big number for tomorrow is that industrial production number at 9:15. That is definitely going to be the big news of tomorrow's trading session. As we go into Wednesday, you've got retail sales. That's the big news. And of course, the FOMC announcement right on Wednesday afternoon. We got jobless claims and Philly Fed on Thursday. And of course, no major news on quad witching Friday. So tomorrow, big news tomorrow, 9:15 Eastern time. We will definitely want to be at our desks between that, 9:15 to 10:15 block because of the kind of the reaction to that news number tomorrow. Now, as always, we'll be in our trade room from 8 o'clock right on Trade in the Morning session tomorrow. I would love to have you there, right there with me. If you want to come out and trade this stuff with me every morning in the trade trade room, what I'll do is I'll put a link for you. I'll make it easy. I'll put a link for you right below this video in the description of the YouTube video here. Grab the link. I'll put a link down there for you guys to come out and register and come out and trade with me every morning in the trade room. So if you want to come out and do it with me tomorrow, I'd love to have you there with me. We open up at 8 o'clock Eastern time. You can grab that link to get registered as a member and in the trade room every morning in the description of this YouTube video. I should also mention too that tomorrow night will be the last newsletter of the week. I will not be publishing newsletters on Wednesday and Thursdays this week. Again, it is Quadruple Witching, which is known a little bit among professional traders as a trader's holiday, right? So Wednesday and Thursday, there'll be no newsletters here as we go into this Quad Witching, right? As we go into the kind of the meat and potatoes, right, of Quad Witching here this week. So again, industrial production tomorrow morning at 9:15. We open the trade room up at 8 o'clock Eastern time tomorrow morning. So grab that link in the description. If you're a gold trader, again, careful as we go later on in this week. And will we get that hurricane, right? Will that hurricane really make these markets move for us, or at least make oil move for us here tomorrow as well? These are some definitely exciting times right now before we get too late in this Quad Witching week. So now we know kind of the basics of what's happening here this week. And there definitely is a sense of urgency this week because, again, as we get later on in the week, traders know that Wednesday, Thursday, and Friday are going to be a lot more difficult. So tomorrow is really setting up here to be one of the best days of the week. As you can see, you got a lot to cover here tonight. Got the E-minis, got the oil, we got the gold. Boy, gold is looking ripe for a short. We get a nice big magnet down there on gold. I got a great plan on the gold for tomorrow. Oil's pretty straightforward. Oil is all coiled up in a ball right now, right? Oil is pretty much in the fetal position inside of a range, and you can definitely tell something is coming here on oil. If that hurricane has anything to say with it, it'll be a bull breakout. I'm looking to fade breakouts on oil, but I'm open-minded to trading a breakout. We'll talk about that in more detail on this video. And of course, over on the S&P. Let's talk about the S&P. S&P had that big, huge gap up over the weekend. Vaccine news, right? Mergers, M&A, right? M&A news overnight. It really pushed this thing up. But I'll tell you right now, it's not looking too good here for those buyers right now. They definitely have had a couple shots to retest that high, and they've pretty much failed miserably. Opening up here on the S&P right now, the first thing we see, we open the chart is that just big weekend gap down there. Now, what exactly is a weekend gap? For me, when I say weekend gap, a weekend gap is the difference between Friday's closing price and Sunday's opening price. That's basically what a weekend gap is. Now, we pay attention to these because these are usually going to be price magnets. Now, we saw a couple of these a few weeks ago, if you recall, and it took a few weeks before they got filled. So normally I would say most weekend gaps are going to be filled before the end of the day on Wednesday. Again, most weekend gaps will be filled by the end of the day on Wednesday. I'll tell you though, if you've been following along the last few months though, we've seen a couple of these weekend gaps that went weeks before they got filled. So there's no guarantee to that, but in my experience, before the end of the day on Wednesday is when most of these historically are going to get filled. Now, with that said, keep your eyes on that 33.27 because that is going to be a magnet for price, which reminds me, there's a lot of price magnets on the charts right now. The oil has a price magnet. Gold has a price magnet. The S&P has a pretty nice price magnet on it. So we're going to see if we can't find some entries. Try to get in before we get to right back to those price magnets, if you will. All right, so over on the S&P here, we got that strong move higher, right, to begin the session. The market then takes off to the downside. A very strong push down, right? That strong push down says expect another leg. And when they got that second leg, see what they did? They drew a trend line off that low up around that high, and they got short above that high. Now, I want you to remember this pattern. right? Remember this pattern. In fact, if you want to, screenshot this stuff, because we're going to see something very similar on gold. Gold is a little bit lagging behind the S&P. Now, with gold being, with tomorrow being one of kind of the last open days on gold this week, we definitely have a great chance to see something like this on the gold. So I'm going to grab this, right, and we'll put that in kind of a back pocket for later on in this video. But what happened today on the S&P is a good possible leading indicator of what might happen here next week, or should I say in the next session on gold, right, tomorrow on the gold. So we know the buyers, right, big strong push up, they failed, right, that lower low, and the bears came out, right, and made them pay. At this point right now, it's pretty much just a bear market into a trading range. And as you guys know, we talk about this quite a bit on the newsletter. There are really three basic patterns to trade a bear market into a trading range. If I'm going lower into a trading range, the three basic patterns are going to be that buyer failure pattern above the top of the range, right? So buyer failures above the highs. And then there are two types of breakout patterns, right? There's a 1, 2, 3 breakout pattern, mark up the low, mark up the high, and sell off the high. There's also that 2 try breakout pattern, strong move down, shallow pullback to the moving average, and a trap above that high. These are the three basic patterns. And of course, if you tune in every evening and watch this newsletter, right, you probably already know these like the back of your hand. Again, the first one is that basically it's a breakout pullback failure, right? We call these failure patterns above the top of the range. That is one pattern I'm watching for here on the S&P. Another one's going to be basically a 1, 2, 3 breakout pattern below those lows. And then, of course, the last one here is that we call a 2 try breakout pattern right below those lows. And I'll give you a second here. Grab your screenshots if you want to. These are three basic patterns. One is a failure. The second one is a 1, 2, 3 breakout. The third one is called a 2 try breakout. Right now, keep in mind, guys, we cover all three of these patterns in our free trading classes here at School of Trade. What I'll do is I'll put a link for you in the upper right-hand corner. If you're not going to be with me tomorrow morning in the trade room, but you want to get a good handle on these patterns, that way we can make the most of our time together every evening on this newsletter, grab that little pop-up that just came up there in the upper right-hand corner, register for our free trading classes. That way you can learn all the failures, the breakout patterns, and everything we do in our trade room. Not to mention, I'll send you hundreds of examples of how we apply our favorite entry setups, right, as part of our 3-step strategy. So don't delay. Grab that link that just popped up there in the upper right-hand corner. And again, don't forget, you can always come out and do it with me tomorrow in the trade room. I'll put all the important information in the description of this YouTube video. So now that we kind of see the idea here, right? It's a bear market into a trading range. Now I can look for those buyer failure patterns up above the top of the range. The buyer failures are always pretty simple patterns. The key is you want to wait for the price to get above the trading range, wait for the buyers to try to buy the pullback and simply sell into their stop losses, right? Wait for the market to get up above the top of the range, get that moving average coming over, let those buyers try to sink their teeth into that pullback. The problem is, though, all of that momentum coming down along with you're right at the high. What a horrible spot to be buying, right? If you're a bull right now, all of that tells me with that range as a magnet, I can sell right into those stop losses for a buyer failure pattern. Now, what I think's probably more likely tomorrow is we're probably more likely here to get that breakdown, right? That 1, that 2, that 3 breakout, right? 1, 2, 3 breakout, 1, 2, 3 breakout pattern. Mark that low, mark that high, find that new hidden channel, right? And we're selling short off the top of that channel. Or maybe the bottom completely falls out of it. Maybe we just collapse down here in the pre-market. We get a shallow pullback to the moving average, a lower low in price. Remember, strong move, shallow pullback, lower low in price. Trap high is the entry on it, right? Trap high is the entry. And again, where are our targets on this? The targets are easy. It's right back to that price magnet, right? That weekend gap. Now you'll notice I'm not just forcing these trades short, right? The weekend gap is great, but it's not enough to tell me to sell short just yet, right? I want to wait for that move up, buyers fail and collapse back down, or that 1, 2, 3 break down, sell off the high, or that strong move, shallow pullback, right, and trap high, right, off of those highs. Again, pretty easy plan here on the S&P. It just all comes down to what do we get for the entry pattern here. Now, can I buy this market right now? What would I be looking for to be a buyer right now? The biggest problem we have is that you can easily see they got their measured move. And it seems pretty obvious with those bears getting short above those highs up there. It seems pretty obvious there's one thing on their mind right now, and that is to take this thing lower here. Now, if I want to be a buyer on this right now, I have a hard time buying underneath the range. I would be open-minded if the market sat here for a while. I would be open-minded to what I call a nested failure pattern, right, below that low. But I've really got to make sure the bears try once, try twice, and then I can buy it, right, going higher here. So I wouldn't be opposed to a nested, we call these nested failure patterns. You know, basically because the momentum is bearish right now, if the market was to go sideways here and can get stuck inside that range, we see that move lower. Again, I'm looking for that 1, 2, 3 break down so I can mark up that low, mark up that high, and sell off that high. But, you know, hey, if they sit inside that range for a while, you know, they may start to like this 33.76 at some point tomorrow. At that point, though, what I'll look for is I'll look for the bears trying once, I'll look for trying twice. I look to draw the trend line off of those lows, and I can look to buy what we call a nested failure pattern. These are a little bit more patient, right? Because you wait for the bears to try twice on that. But once those bears try twice, I can easily buy into those stop losses for, again, it's a failure pattern, but it's called a nested failure just because of momentum. Momentum is too bearish for me to really get too aggressive being a buyer. What I would really like to see to be a buyer here, to be honest, is I'd like to see a breakout, right? I'd like to see us give me a strong move higher, show me you really want this thing going higher, give me a nice strong breakout. Now, if I can get that 1, 2, 3 breakout pattern, I'm more than happy to draw the channel off the highs, find that low, and get in off the first pullback, right, off the low. Remember, the first test of the low of those hidden channels there, those are always the best test, and our target is easily back up at 34.11. That is a major, major top up there, right, from not Friday, but last Thursday's trading session. So just keep that in mind as we go higher here, right? That 1 strong move up, 2 pull back to the moving average. And again, I'm not interested in buying this first pullback. Look where you are. You're right up at the measured move. Not a very good spot to be buying up there, but I'm more than willing to be convinced. You're more than welcome to convince me, but you've got to show me some proof. Once I get that 1, 2, 3 break higher, then I can mark my highs, I can mark my low, and I can find that pullback off that low. All right, guys, so I think a relatively straightforward plan here, right, on the S&P. I'd like to be a short seller. What I would assume is we're going to see this thing continue running lower here. So we'll be able to structure that entry, right, as we go lower back down to fill that weekend gap. And guys, don't be surprised either if we head back down to this area and we go sideways down here, right? If we go sideways back around those lows, what do? We look to sell above the top of that range, right? Using what? Using a buyer failure, right? Same pattern that we talked about before. And again, don't forget, I'm just simply kind of glossing over this strategy for tomorrow. I would definitely encourage you, get a deeper dive into all of these patterns by grabbing that free trading course linked up in the upper right-hand corner. All right, we're looking good here. So S&P, I love what I see here on the S&P. Hopefully we can get a nice clean entry on the way back down to retest those lows. And again, tomorrow morning, right, we'll do it together in the trade room tomorrow as well. How about some oil here? Now, don't forget, oil is looking down the barrel right. We had a lot going on in oil this week. We get the rollover for tomorrow. Right now, right now, if I take out my market analyzer here on Ninja Trader, if I zoom in on this, you'll see the oil market is right there. They're right there. So right now, the 1020 contract has more volume than the 1120 contract, but that could easily flip tomorrow. And it might honestly be it might be a balanced day tomorrow too. We may be one of those days where they both have kind of equal amounts of volume. But the rule is pretty simple. Once the 1120 contract has more volume on it, we're going to switch over to the 1120 contract. Unfortunately, I can't really kind of read. I'm good at anticipating this stuff. But as far as rollover goes, I'm not quite sure if I'm going to do the rollover tomorrow or if it'll be on Wednesday. Usually rollover is around that Wednesday, Thursday time of the week. But, as always, right, we'll let the market tell us when it wants to do its rollover. So maybe rollover tomorrow. And then how about the hurricane? We don't even know how this hurricane is going to impact this market. Now, again, we are swimming in crude oil right now, right? I mean, they have tanker ships. I live in Los Angeles. If I take out the binoculars, right, out my back door, I can see the tanker ships, right, sitting out there in Long Beach Pier, right, at the pier in Long Beach, just sitting out there with, I don't even know, right, tens of thousands of gallons, right, of oil sitting on them. The world has plenty of oil supply right now, and this pandemic has really not made it any easier, right, to get that consumption up. So normally a hurricane would really spook this market. Does this market look spooked? It certainly does not, does it? Right? So it doesn't look like the hurricane is impacting us too much. But if this thing starts to rip higher here, right, tomorrow, we have a pretty good idea. The market will likely be responding, right, to that hurricane. Now, this could send us a hurricane could easily put us back into those, low 40s, right? Easily back up to that 42, 43 area by the end of the week this week. But again, I am not in a position right now to be saying let's buy this market right now, because as you can see from the look of the chart, we have a bear market into a trading range. Now, we just talked about this on the S&P, right? There are three basic patterns that we like to use whenever we have a range with a bearish bias to it. The one I really hope we get is I hope we can get up above this top of this range here. Let me zoom in this a little bit closer here. Hopefully we can get up above this range. I'd like to get up around this 3782 area. If I had it my way tomorrow, I'd get us up around that 3782, get those buyers to come out and try to buy the pullback, right? Let them try to come out and buy the pullback, and then we can sell into those stop losses, right, for that move back down. We see these patterns quite a bit during range-bound markets. One right there, right? Go up, let those buyers try to buy it, and simply sell into those stop losses, right? So that is the first setup we're watching for here on the oil tomorrow. And you can see, right, what I've done is I've marked up some of these levels of resistance overhead. That trend line is great overhead. So again, if I had it my way tomorrow, trend line, swing line, put me up in that area, right? Get me up, get these buyers trying to buy, and we can sell right into those stop losses. A buyer failure pattern to sell above the high of this trading range. Now, it does seem a bit crazy to be saying a bear breakout when you have a hurricane hitting the Gulf of Mexico tomorrow, but hey, times are interesting this year, aren't they, right? Nothing seems to be the same this year as every other year, besides the fact that we stay consistent every day in our trade room. But what do we know about the bear move down? What are two patterns going lower here? First of all, you've got to remember there'll be a lot of buyers waiting underneath that trading range. If I want to be a seller, I have to wait to get a 1, 2, 3 breakdown, right? Strong move lower, pull back, holds off the moving average, strong jump off. Once I have that 1, 2, 3 breakdown now I can mark up that low, I can mark up that high, and I can sell off the high of that hidden channel. Then if it really pushes, right, if we really see a strong move down, what I can do is look for that 2-try trap, right? 2-try breakout. Strong move down, shallow pullback, lower low. Remember, that's the key here. Strong move down, shallow pullback. The shallow pullback is usually the giveaway. And then once you get that lower low in price, you know there are going to be a ton of sellers just waiting to hit this sucker right off that high. Great setup. Love those patterns. And just remember too, I'm always trying to find other kind of hidden channels, right? I'm always trying to draw trend lines off these lows, off these highs. I'm always trying to find those hidden or reverse channels to combine these entry patterns with, right, on these breakouts, whether it be a 1, 2, 3 breakout or it be a 2-try breakout, right, as we go. Now, where would our target be to the downside here for tomorrow? The target's pretty straightforward. You get a big low at 35.13. This is kind of a minor swing low. It looks big on this chart because this is a 3,000 tick chart, but if this thing really pushes lower here on strength, they're going to be hunting for that 35, right, 35.13. That is a big monster low here from, when was that? That was back in June, I believe it was. Yeah, back in June was that low from 35, right, 13. We go 35.13 back to 30, and then we start going down to like 26, 27. Now again, it does seem a little bit crazy to be talking about a short here, right, when we get a hurricane bearing down, but again, the chart tells us we're bearish into a trading range. So 3 basic sell setups, right, with the risk of repeating myself too much, right? You guys know those patterns for tomorrow. How could I buy this market right now? Could I buy this? You definitely can. There are really three of the same patterns I would use to buy this market. To buy underneath the range because momentum is bearish and because, you know, I could swim in oil in my backyard right now, right? Because there's so much of this stuff right now. I really do want to stay away from the buy side. But knowing that this is a range and knowing that the range is a magnet, if we do make a run lower and the bears try once to get short, the bears try a second time to get short, I like to draw that trend line off of that low and look for, again, we call these nested failure patterns, right? Now, that's one variation of a nested failure where you're literally buying into the stop losses of those sellers. Now, again, because we're bearish, let them try once, let them try twice, right? And then buy into their stop losses. And don't forget, if we get that long off the low, remember to measure the amount below, the amount above, and that will give you your pendulum swing target, right, back on the other side of that trading range. Now, remember also too, sometimes these nested failures, they're a lot sharper, right? 1 try for the bears, 2 try for the bears. That is also a variation of a nested failure. In fact, you can see an example of that right here, right? There is a nested failure right there. We run lower, the bears try once, the bears try twice, right? A little trap low right there. That pattern is identical to the pattern we're looking for right over here. So we can definitely buy off this low. Just remember though, wait for those bears to try a couple times, right? I'm not trying to buy it and predict that bottom. I'm going to wait and see, right? Can they get that break down? If they can, we'll get back after it, right? And look to sell off the high of that channel, right? But if they can't, right? If we run lower and they try once and they try twice, right? Once we get 2 tries on this, now you know you've got a bunch of stops sitting up here. The range acts as a magnet. Be a great way to either buy into stop losses or if you really get lucky, right, buy that trap low below the low of the first try for the bears. Again, we call these nested failure patterns. We see a lot of these every week, and I cover those in that free trading course linked up in the upper right-hand corner. How about a buy side breakout? Right? How do we buy this thing on a breakout? What's a breakout look like? Well, one of them is the 1, 2, 3 breakout, right? Strong move up, pull back to the moving average, right? Jump off the moving average. Okay, 1, 2, 3 breakout, 1, 2, 3 break higher here, mark the high, mark the low, and we're buying the low of that hidden channel, right? 1, 2, 3 breakout into that hidden channel pullback. Or another pattern would be that strong run higher, right? That shallow pullback, that higher high in price, that trap low, right? That 2 try breakout pattern. And of course, maybe we get lucky, right? Maybe we get lucky. Maybe we get a little nice little hidden channel there, right? By the low of that hidden channel. That will be another pattern I'm watching for here tomorrow. And don't forget too, if the market sits right inside this range, what do? We sit on hands, right? We stay out of the middle because that's going to be a big price magnet, right? Price magnet on the S&P is that weekend gap. Price magnet here, right, on the oil. What goes up comes back down. What goes down comes back up. We'll use that price magnet, right, as our guide here for tomorrow. And again, don't forget, tomorrow we're keeping our eyes on the rollover for tomorrow, and we'll hear more about the hurricane tomorrow. You're going to know right away if this market starts to take this hurricane seriously here as we go into Tuesday and Wednesday. Now, how about some gold? Speaking of price magnets, right? How about some gold here right now? Let me zoom out here real quickly because it's really important you see kind of the big picture on this. You can see why I have that price magnet down there at that 1955 to 1922. Now, see what's happening here? Right, that was a big move down, pretty much into a range here, right? Pretty much into a range, lower highs, higher lows. There's a big magnet right down there at 1955 to 1952 here, and that magnet is probably going to drag this market lower. You'll notice what happened, right? The market went up. The buyers, of course, are to buy the pullback, and sellers are selling, right? They're selling into those stop losses for that move back down. So it looks like that range magnet is right on our radar here for, right, tomorrow. So knowing that, right, how do we structure this? Because you can see, right, you can definitely see here the bulls had a pretty nice strong move higher here. Now, I talked about earlier that you want to keep an eye, or you want to look at the S&P, right? Because the S&P really was kind of a leading indicator of what might be happening here. Let's go back to the S&P here real quickly here. And remember what happened in the S&P. S&P had that big move up. They had that strong move down. Right? Anytime we see a strong move in one direction, we expect to see another leg in the same direction. They then use that low to find the hidden channel, and they hit it, right, up around the high of that hidden channel. So there are really going to be, that's one setup we're watching for on the gold tomorrow. But you also, too, want to think, too, is what if those bears, what if they keep it going? Right? Then what do? Then we mark up that low, we mark up the high, right? And we sell the first test of the high of that channel, right? So now that we kind of see the image on the S&P, let's go back to the gold here again, because now we know the price magnet down there at 1954 and change, right? We know where the market wants to go. The most important thing right now is we've got a pretty strong bull move higher here. There's no doubt about that, right? The buyers definitely have some strength, but there's a big elephant in the room, and that is that big move down. Anytime we see a strong move in one direction, we anticipate another leg in the same direction. Now, what I'm thinking is does this market just roll over and then we draw that hidden channel and get short on the next hidden channel, right? That'd be a 1, 2, 3 reversal pattern, basically, right? It'd be a 1, 2, 3 reversal. 1, strong move down. 2, the pull back to the moving average. 3 is that strong jump off, right? And then, of course, we'll look short the top of that channel. That is a great setup we can watch for tomorrow. Or, right, or does it fall out of bed here, right? Do we see a shallow pullback, a lower low in price? That could easily be a trap high, right, to get short here on the gold. And again, I always like to encourage you guys to find those hidden channels, right, and combine those entries off those hidden channels. So those are some setups I'm watching for here tomorrow. What I'm also open-minded to tomorrow as well, and this is kind of where the S&P comes into play here. If they just run lower here, right, and then bounce, well, now what I'll do is I'll mark up those lows, I'll mark up that high, and now we have a great shot here for a trap high, for a buyer failure into a pullback combination. I mean, there's a lot of potential setups we can look for on this. I can see 3 possible entries. One will be a trap high above that prior swing. The other would be that buyer failure pattern, right? And then, of course, the third one would be as the moving average comes over, it's a pullback. So again, basically a bull trap, right? A trap high, a buyer failure pattern into a seller pullback, right? A bear pullback. Now, we might get all three of them. We might get only one of them. We might get none of them. All I know is I'll be looking for these three setups as we get that pullback. Now, the only thing I'm concerned about here, the only thing I'm wondering here is what if we don't get that move lower before we go higher? You know what I mean? For example, what if the market just simply turns around and goes higher here right now? Well, at that point now, I definitely don't want to be a buyer up here just because you're right back up into the highs, right? So I'm not going to buy that. And I've got to be a little more careful being a seller here as well. So how would I sell this market? How would I sell this market if the market takes basically pulls a U-turn and runs right back up? Right, what I would do is I would look for a nested failure, right? I would look for those buyers to come in, trying once, trying twice. Once I see those buyers trying once and trying twice, now I know I can sell the trend line off the highs, right? I can short that trend line. I can also look for a trap high. If I can get rid of that trend line there, right? Once I have those buyers trying once, I can mark up that swing. And of course, I can look for that trap high there. So those would be some shorts I'm watching for, again, if we don't get this move going lower. But what I'd like to see is either that 1, 2, 3 reversal, mark the low, mark the high, and get short off the first test of that high, or run lower, shallow pullback, lower low, trap high, right? That will be great. Remember, strong move down, lower low, and again, find that hidden channel and sell it. Or do we continue, gotta get rid of this here real quickly, right? Does the market kind of, reject that idea, run higher here, try to dig into these highs here right now? If that's the case, again, I can't buy up here. I still have that magnet ready to be used, right? But I just can't buy high like that. So if I'm worried about being too high to buy, but I'm obviously still very bullish, the best way to get short on this is let those buyers try once, let them try twice. Again, ideally, be a trap high. Right. By the way, what do we call those? We call these nested failures, right? Nesteds, because there's basically a failure inside of a failure, right? It's a pullback inside of another pullback, just like those nested dolls, right? Those Russian nested dolls with a doll inside another one, right? So that would be a great spot there to sell short as well. Now, how do we buy this market, right? How do we buy it? What I really got to see here is, and this is where having a little bit bigger picture comes in handy here. We have a major top up there at 75.2 there. Now, our next level higher is way up top at 2,000. So there's plenty of open space up there if we can crack through that 1975 right in a quarter. Now remember, we got central banks this week, right? We've got FOMC this week. We have a lot of not trouble, but we know there is a level of concern here for gold traders, right? It's not so much, right? It's not so much that I can't trade gold. It's just that, as we get later on this week, right, we really have to be careful because of those central banks, right, and of course quad witching later on in the week. So I've got to get a real strong push here, right? Got to get a real strong push here. I can't just buy a breakout here. I want to get up. I want to see buyers hold, and I want to see them push through. Right? Show me you want this. Show me you really have the strength to push it higher here. Then I can mark up that high. I can mark up that low. I can find that new hidden channel, and I can buy the low of that hidden channel. Right? So that breakout pattern will be great, but I have to wait for proof of this. And I mean, look at the space. There's tons of space overhead. The hardest part being a buyer on this gold, from what I could tell tomorrow, is going to be if the market just kind of barely goes higher, right? If it barely runs higher and it pulls back here, that's going to be a very dangerous place to be a buyer because you're buying into this high, the major high. Give me another strong leg, right? Show me you mean it. Then we can go out, we can mark the channels, and we can sort of structure that trade, right? I'd much rather wait patiently for a trade that has a lot more proof, a lot more reliability than try to force that first pullback through at those highs. Remember, being a trader is not about getting lucky, right? We're not trying to get lucky every day. We're trying to find the most reliable setups setups, because those are the ones you can pay your bills with, right? Surprises, I don't want surprises, right? And I don't want to get lucky to make money, right? I want to make money with consistent, reliable setups. I'd much rather skip the gamble trades and stay focused on those trades that I know I can count on. And I'm sure if you're watching this late in the video right now, I'm sure you're probably in the same boat as I am. So don't forget, tomorrow morning, 8 o'clock Eastern time, we're going to trade this stuff all together, right, tomorrow morning. I hope I'll see you there with me. Will we get rollover? Will there be a hurricane, right, breaking landfall tomorrow? What will the price action look like? All I know is we get a great plan for tomorrow. So make sure you guys come out and join us tomorrow morning, every morning that is, at 8 o'clock Eastern time in our trade room. Getting registered as a new member is really easy. I'll put all the links you need to get started in the description of this YouTube video. If you're on the blog right now at Sideways Markets, I'll put a big button for you guys to get registered below this video tonight on the trading blog. And as always, don't be afraid to call me in the office. I'll be here the rest of the evening tonight. I'll be around here for the rest of the week, so don't be afraid to call that toll-free phone number. If you have any questions on live support, right, if telephone isn't a good fit for you, grab that live support tool for chat back and forth here with our corporate headquarters here in Los Angeles. So keep in touch. Don't be a stranger. Get registered with that link in the description of the YouTube video. Don't forget to join the free trading class if you haven't done so already. And how about a thumbs up for me tonight? If you're still watching this video right now, I hope you'll subscribe. I hope you hit the thumbs up button here for me. And I hope you'll tune in right tomorrow night. I hope to see you tomorrow morning in our trade room, or back tomorrow night on the next edition of our nightly newsletter. All right, guys, my name is Joseph. Great job today. We'll see you guys tomorrow. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.